Hi, I'm Hannah Wallace and welcome to FinextraTV Sibos. Calling in now to talk about the key areas for banks and fintech's collaboration in a COVID world is Gavin Maclean, Managing Director, Payments and Receivables at Lloyds. So Gavin, welcome back. Good to see you.
Good to be here, Hannah. Thanks for having me.
No problem at all. It's good to have you on. So yes, one topic that has not budged from the centre of discussion in past years is the value of partnerships, and this year is no different. But tell us, what impact has COVID-19, I mean, we're slightly out the woods now, but maybe not so much. How has this had on collaboration in the industry, do you think?
Yeah, well, it's certainly still a very big talking point. And, you know, from our point of view, payments has long been affected by three super trends. Firstly, regulation, progressive regulation, creating an environment for things like open banking. Second is improvements in technology, like cloud and API technology that just enable journeys that weren't possible 10 years ago. And thirdly is the trend towards digital adoption. And that's constantly raising the bar of consumer expectations. You know, more digital experience at greater speed, self-served, anytime, anywhere. And COVID-19 has absolutely supercharged digital adoption. And as it supercharged the digital adoption of payment systems and processes, it's also supercharged the opportunity for new propositions, unlock new use cases, and generate a new scope for those partnerships that you were mentioning. And partnerships offer benefits to both banks and fintechs alike, and that remains the case today. So, you know, fintechs can help banks accelerate the adoption and the development of new technology and innovative propositions, and that reduces the cost to change, the time to change, and the financial expenditure. In fact, conditions like we've seen over the pandemic, this speed can be hugely beneficial. You know, when you've got to do things quickly, working with expert partners to roll out new things is a really smart thing to do. And then, of course, for the fintech, they can benefit from the significant scale and test opportunities that a large bank's infrastructure and customer base can offer. So those are, you know, the two-sided benefits of banks and fintechs partnering.
Sure. The word we keep on hearing is acceleration, but supercharged works just as well. So you obviously would say that there has been an increase in demand and opportunity for new propositions. Perhaps you could share some examples for us around that.
Yeah, sure. And how does that old saying go? Adversity being the mother of invention. And the pandemic has undoubtedly led to invention and has undoubtedly created new opportunities. First of all, I was impressed by how our UK payments industry worked together to deliver practical things like increasing the contactless limit on card payments. That helped lots of payment and checkout experiences be able to be done in a socially distanced and touchless manner in many stores. And then there was the rise of genuinely new or previously not widespread payment methods that really came to prominence in the past year and a half. And at Lloyds, we're lucky, you know, we've got a great variety of customers in our business and our personal bank, and we process around 1 in 3 bank account payments in the UK. So we get an excellent perspective on what's really going on. And what did we see? What were the examples? Well, we saw a big rise in open banking payments over the course of the pandemic. At one point, those volumes were doubling every 10 to 12 weeks. We also saw cash fall significantly, as you would imagine, as social distancing impacted physical contact. But actually, cash use has just about returned to pre-pandemic levels, we've noticed in the last few weeks as the economy begins to open up more fully. And the real rise was amongst digital payments over that 18-month period. So things like pre-ordering and home delivery rose, the option to click and collect, or even things like being able to order and pay at table using a QR code. Those really became mainstream experiences as businesses and individuals had to adapt to those new ways of doing things. So we've been pleased as I say, at Lloyds, to be able to support some of those developments and support our clients with those new payment journeys. And of course, the interesting thing is we imagine that many of those innovations inspired by the crisis will actually be here to stay. And therefore, the landscape for payments will yet again have been permanently altered, as we've seen so many times in recent years in particularly the UK payments industry. So it's an exciting time.
It is. Thank you, Gavin. You've really painted the picture for us there. Some good examples, and I say in a good position to share this with us. And also, I understand that Lloyds Bank's team has been very busy with fintech partnerships throughout the pandemic and also continues to do so as we move forward. So it'd be great if you could shed some light on maybe some past partnerships, but also which each party can do to ensure collaborations are fruitful going forward.
Yeah, sure. So, as you mentioned, this has been a long-term strategy at Lloyds Bank. We very much recognise the value of working with fintech partners, and we have been and we remain firmly open to partnership opportunities. Crucially, we've not stopped partnering over the pandemic. In fact, if anything, as I mentioned, it has supercharged the opportunity to do so. So our partnership approach is both in terms of establishing strategic partnerships with fintechs and working together on proposition development. So a few examples, we've partnered with an organisation called Form3, who provide a cloud-native payment platform. And that's given us the opportunity to investigate and develop payments as a service, which will be the basis for our response to the new payments architecture when it happens in the UK. On the proposition side, we've worked with MasterCard, well known, and Bottomline Technologies to bring open banking payment acceptance to our commercial customer base. And this is now helping charities, financial institutions, car dealerships, and many other types of business accept payments through open banking. So our approach is sometimes that traditional buyer-seller relationship. It's sometimes a product partner, and sometimes it's as an investor. So in the case of Form3, that was an investment opportunity for us as well. But whatever approach we take, we always aim to maximise the strengths of the fintech and the best qualities of the bank. Mm-hmm. And in terms of supporting partnerships, there are a few simple things that both parties can do to really make it work. So we need to jointly define a clear value proposition, understand what pain point we're solving for or what opportunity we're trying to address. Agree on a mutually beneficial partnership model, so ensuring something that works now but is also sustainable over the long course. And banks should help fintechs understand some of the considerations that they face, such as the requirement to meet privacy, data security, and financial crime protections. And they need to foster a genuinely collaborative culture within the teams. And by the way, that can sometimes go as far on the empowerment scale as creating single co-located squads to work together on developments as one. But whatever the approach, I emphasise the point that it should always aim to maximise the strengths of the fintech and the best qualities of the bank. That's how we work together, that's how we benefit each other, and ultimately that's how we serve our customers better.
Brilliant. Some key advice to end on there, and you explained the steps really clearly. So thank you very much, Gavin, and looking forward to catching up further down the line and reflecting on those developments. But for now, we'll leave it there. Thank you very much, and have a good Sibos.
Great, thanks. You too. Thank you.